we have all of the participants here, and we're ready when you are. I know that we're a little bit early, but we like to do that just to make sure we get the details worked out for the team here. So if you could walk us through what you want us to do, we stand ready.
I have a quick hello. Hi, team.
Hello, how are you?
Hello. Hi. Scott, would you like me to share? I think it might make sense if I share my screen with that, just so you guys don't have to.
Please.
So that you have the full view.
Right.
Yes, ma'am.
Okay, I'm going to get that set up. So just give me a second.
Yeah,
So
like we did last time.
I'll just provide a brief introduction. So our final presenter for the day is White River Bankshares, also known as Signature Bank of Arkansas. We'd like to welcome, is Gary there?
Gary is not here today. He's traveling, actually.
Okay, so Gary's the CEO and Scott Sandlin, the Chief Strategy Officer. And maybe you could introduce the rest of the team as we go. It's a growth-oriented bank in Northern Arkansas. It has a seasoned management team, many of whom have roots in the Walmart organization. In addition to its longstanding banking operations, Signature has created a separately branded bank, Banco C, to serve the Hispanic community in Northern Arkansas. So we'd like to get hopefully we'll get a nice update on how that's going. But, we can begin by, you could introduce the team and then maybe just give a little bit of commentary if you wanted to walk through some of the slides, and then we can go right into questions. And the audience, we've posted their fact sheet in the chat, and feel free to start filling the Q&A box with questions.
Perfect. I assume that we are live.
You're live.
That felt like it was live anyway. I have a whole room full of people with me today. Some are going to present, some are going to listen.
Okay.
Some may be asked to help out on some of the Q&A that we do. I have our president, Brant Ward, is with me today and will be presenting. I also have Jeff Malin, who is our chief risk officer, who's here. I have Danny Lewis, our chief credit officer, is here. But we have Crandall Street, who's our chief administrative officer here. And I have Casey, who's here also listening in today. But we're here to answer questions shortly and kind of take you through a presentation. Very excited about this venue. We found this group of people to be very helpful and potentially investors for us in the future, wanting to learn more about our bank and our geographical location. And Brant's going to start off and kind of take us through that. But glad to be here today. Brant Ward.
All right, thank you. Well, I really appreciate everybody getting on the call and listening to what we have to say. What we feel like we have is a very exciting growth story to share with you today. Like on this slide, White River was founded in 2005 as a de novo for Signature Bank of Arkansas. We've grown mostly organic since then. We have offices in Northwest Arkansas, across the north part of the state, and then also in Brinkley, which is East Arkansas. We're traded under the ticker symbol WRIV on the OTCQX. We very much focus on small business and professionals. And when I really think about the growth story that we're going to tell you today, it's really about the reason that Signature Bank of Arkansas was founded in Northwest Arkansas was really about in the local community, there were big banks that were getting bigger and small banks trying to fill that niche of small business owners that really needed advice. They needed operating lines of credit. They need the ability to purchase CRE. And that's really where we flourish. And so the reason that Signature Bank of Arkansas was founded is also the reason that we look for in other organic growth markets. So we can move to the next slide, please. Overview of our footprint. Everything in the north part of Arkansas is organic growth. We did purchase a bank in Brinkley in 2007. That was about $100 million bank. Beyond that, everything else has been organically grown. And we continue to look for locations and markets where the banking ecosystem is really disrupted between the really big banks and, like I said, small banks trying to step up in weight class and really help service our type customers. Total assets at the end of September were 1.09 billion. We feel good about how we've crested over $1 billion this year and been able to work through Fiducia and get all of those items checked off as we move forward past our growth. Next slide, please. Management team, like you had heard earlier, we have a very experienced management team. Most of us have been able to go from asset zero all the way through $1.09 billion. And so what you see is a group of people that have been able to scale from the $250 million mark to 500 to 750 and now to $1 billion. And really, I think the best things are yet to come for this group, because we've been able to see how to go from zero to $1 billion. And really, I can see $2 billion in our line of sight pretty easy. And so what we're really trying to set up for is scale as we move past $1 billion and on into the future. Next slide, please. Our proximity to other metro markets. So if a resident in Northwest Arkansas has any need to go up into a metro market, they can be there in half a day. If you look east of Fayetteville, there's really, if you want outdoors, rivers, hiking, camping, you have that available to you. So we really sit in a pretty sweet spot in the Ozark Mountains that allow all of our residents to kind of live how they want to live. And particularly if you're coming from the coast, we can give you everything that you need and more from where you came from. Next slide, please. Talk a little bit about market expansion. We laid out 3 new markets in about 18 months. And what we look for in a market is, number one, the banker. So we need to make sure that we have a banker in the market that's going to allow us to responsibly grow and focus on deposits. We found those in Harrison and Jonesboro. Jonesboro is a town of about 80,000 people. It's home of Arkansas State University, and it is one of the growth markets in Arkansas. So that was a focus of where we wanted to go. It's a $4 billion deposit market. It is another one where there are big banks that are getting tremendously bigger and small banks trying to fill the void. And that's really, like I said, the sweet spot for us. The same can be said for Harrison. Harrison is a smaller town, but it is going to continue to grow because Northwest Arkansas is moving eastward. They're also headquartered for a big part of FedEx's ground division. And so there's a lot of growth there that's unique because it sits in the middle of the Buffalo River and the Ozark Mountains. We also had a few hundred shareholders that were already in Harrison. And so it made a lot of sense for us to de novo there. And so really what you see is 2 good growth markets for us. There's $1 billion in deposits in the Harrison market. And so we feel really good about being able to take those market shares. Next slide, please. So as Ian alluded to earlier, Banco C is our 3rd growth investment. And this is a Hispanic-focused, primarily branded bank that's a division of Signature Bank of Arkansas. And the reason we did that is that we have a significant population in Northwest Arkansas that are Hispanic. That is only going to continue to grow, not only in Northwest Arkansas, but in the country. And so when I look at growth opportunity for small business owners, commercial real estate owners, I think this population is really coming into its own. And so what we're able to provide for them is very much the same type service that we provide for all of our other markets, for small business owners, high net wealth individuals, and really being able to help them see how to utilize operating lines of credit, how to purchase CRE, and how to be a good steward of the banking ecosystem for the Latino community. And so what we've seen is good growth. Would we like more growth? Absolutely. But where we are today is we've set the plumbing out to be able to be very successful there. And we feel good about our ability to move into that into the coming year. We did open that location in September of 2022, so we just crossed over a year, and so we're really excited about our prospects there. Next slide, please. In the Northwest Arkansas market, it's a $16 billion deposit market. We're ranked 5th in that. For the overall state market share, we rank 24th. And so with our new de novo locations, we feel pretty good about being able to move up that leaderboard in the Arkansas market share, because our total deposit market share capabilities is about 21 billion combined with all the markets. So we feel good about being able to continue to go after deposits, even in this deposit rate cycle that we're in. Next slide, please. So Northwest Arkansas is the home of University of Arkansas, Tyson, J.B. Hunt, and Walmart. Walmart's building a multi-billion-dollar campus right now. It is an amazing thing to see. And so what I think is the most critical thing to think about here is that Walmart is investing that type of money to bring people here. Tyson has consolidated other business lines of businesses that they bought and are bringing those people back here. J.B. Hunt, while it is a trucking company, what a lot of people don't know is it is heavy in IT. And so there are a lot of IT jobs that are coming here because of J.B. Hunt. And so when I think about the corporate offices of those companies being here, yes, there are a lot of employees there, but the majority are very, very well paid and continue to bring the average wage in the area up. And so they're looking for amenities to continue to go along with recruiting people. The Waltons, the Tysons, the J.B. Hunts, the families have all invested in our area. So their focus has really been around quality of life to be able to attract workers and people to go to work at those places that come from California, East Coast. And so that has been a big push for them. The University of Arkansas continues to do well. We continue to grow students, and that gives us a good feeder system into our workspace here. Walmart also requires that all of their vendors have a presence here. The Procter & Gamble home office for Walmart is just down the street from our home office in Fayetteville, but people like Pepsi, Coke, Kellogg, they're here too. And so you also have a very well-paid, high education level of people that have moved here just solely to work for those vendors. And so there's a population here that, again, needs a higher quality of life, higher quality of living, and that's what's being provided by Waltons, Tysons, J.B. Hunts. And then they're also bringing in further investment into the area. And so it just continues to grow on itself. Next slide, please. Our MSA is the 9th fastest growing in the Southeast over the next 5 years. We continue to bring in tech jobs. This has really been kind of a confluence of a few different things between the big corporations and the companies that support those corporations, and then the offshoot of that of entrepreneurship. Northwest Arkansas has really been a big proponent of entrepreneurship. Walmart, Tyson, J.B. Hunt are big examples of that, and that just breeds more entrepreneurship into the area. And so when we think about our sweet spot of small business, it's really those entrepreneurs that we really focus on and can help move from $1 million in revenue to 5 million to 10 million and continue to grow their business. And so that, for us, our product suite is set up to be able to bring you in as a small business owner that needs an operating line of credit to move to investment sweeps so that you have the ability to handle your cash, either sweeping your loans or sweeping your deposits. And then once you get to maturity and you sell your business, we use Raymond James as our investment arm to be able to service those clients. So we're really a beginning to end banking stop for small business owners, start to finish. Next slide, please. Financial highlights. as you can see, since 2018, we've been on a very good growth trajectory, both loans and deposits. This market is giving us all the growth that we could want. And so that's why it's so important to think about Jonesboro and Harrison and Bonco C as loan diversifications in markets that are growing and growing good for us. So we're not going into new markets and trying to enter new business lines. We're really going into new markets to do the same business lines that we have. And I think that's a very important distinction as you think about big banks trying to figure out how to make different money and small banks trying to step up in weight class and really try and serve these customers. So feel really good about our growth potential going forward, not only in the new markets, but also in Northwest Arkansas. Next slide, please. So net income, 2018, 2019, we started having good trajectory and liftoff. 2020 was COVID year. We took the opportunity to put a lot of money in loan loss reserve for just in case as to what COVID might bring to us. We were very fortunate that COVID did not really damage asset quality. And so in 21 and 22, we had better earnings years. In 22, we set out and went through a market expansion. 2021, we went through a core conversion. And so 21 and 22 were really big investment years for us. And then in 23, we rolled into margin compression, just like every bank has. So we continue to work through that. We continue to bring our new markets online and reprice assets to help offset the margin compression. Next slide, please. And this chart paints a similar picture. 22 to 23, we've had cost of funds increase, and assets have not kept up with that yet, but we continue to reprice those, and we're able to invest in the current market with good, strong interest rates on both the bond portfolio and the loan portfolio. Next slide, please. Diversified funding mix. We continue to focus on non-interest bearing demand accounts. We're up to 25% of total deposits. And when I think about the new growth markets, that's really a big focus. We're focusing on low cost deposits, which would also include interest bearing and savings and money market accounts. But it's really about having that total relationship of the small business and really being able to help them focus on running their business while we help them in the background. Our fintech strategy is pretty simple. We want to enhance customer service and enhance the customer experience. And then we want to automate as much as humanly possible in the back end. And so when I think about our investment in tech and our investment in core conversion and digital applications, it's really about being set up and stubbed out to be able to use APIs to plug in whatever new technology comes. But the focus of that new technology is really about customer experience and automating the back end. And that is our total focus. Next slide, please. I'll turn it to Jeff Malin, our Chief Risk Officer, to talk about loans.
Thank you, Brant. I'll talk a little bit about our loan portfolio, which ended the third quarter at just a little bit under $909 million. That's up $33 million from the end of the second quarter and $73 million since year-end 2022. So obviously we've been able to stack on some solid loan growth, even in the face of a challenging interest rate environment. What we've seen from an individual borrower, individual loan basis is that it's requiring our borrowers to come to the table with more of a down payment to get those project cash flows to work. But thus far, our borrowers have been willing and able to do just that, and feel really good about that solid loan growth over the course of the year. And with that loan growth, we predominantly price off of Wall Street Journal Prime. So we're really booking loans at 8+% all day, and that inevitably is going to improve that net interest margin slide that Brant talked about earlier. When you look at the current portfolio mix, it should be no surprise, as a $1 billion community bank headquartered in Northwest Arkansas, we're predominantly a real estate lender. Within the real estate categories, a couple categories get a little more attention than others. You see that other CRE at 19.4%. That's the non-owner occupied commercial real estate bucket. We are an active participant in that market. It's obviously had a lot of conversation based on those rising interest rates that I mentioned. One of the things as a bank that we've come a long way in the last 5 years or so is our ability to really stress test that portfolio and take a good hard look at where we're at, identify risks, and handle issues. We just completed a really good, thorough stress test at the end of the third quarter on that portfolio. Pleased with the results, and going in to the next iteration of a deeper dive of looking at those top 20 credits within that portfolio, which is about 70% of the total, and trying to be proactive with those borrowers as we see possible problems on the horizon. But we've been very pleasantly surprised about not only the performance of that portfolio, but the outlook for the performance of that portfolio that is tremendously scrutinized as it should be. So the other portfolio, the sector that we spend a lot of time talking about internally and externally is the construction portfolio. Over the past decade, we've had extremely positive results experience with our lending in that sector. We have a very seasoned customer base that we have focused on, dealt with for a long time, and had a lot of success with them. What's a little bit different about our construction portfolio, maybe compared to others, is that about half of that is single family construction. And so in Northwest Arkansas is where that's predominantly located. Northwest Arkansas has a supply issue of housing. And so we are actively participating in helping make up some of that shortage. And obviously with the supply issue, those houses are turning pretty quick, even in the difficult mortgage environment. We have a great amount of people moving into the area, as Brant mentioned, and so that's been a wonderful sector for us. So overall, just really pleased with the growth thus far in the year, stacking on loans at 8+%, getting that yield up, and feel good about the opportunities that are going to be presented to us going forward. Next slide, please. You look at the credit quality trends, incredibly positive. Looking back to 18, we did have some kind of hangover ORE from years before. Worked out of that largely in 19 to culminate in 2020 with no problem assets. We've maintained minimal problem assets for the last 3 years. At the end of the third quarter here, we had 125,000 in non-accrual loans and no ORE. That non-accrual is represented by 2 relationships, both just kind of personal individual borrower related issues, and certainly not indicative of any kind of market issue. So feel great about that level of credit quality. We've maintained it for several years now. We think we do a good job of underwriting those loans, selecting the risk, and then monitoring and measuring. And we certainly spend a lot of time internally focusing on the quality of our loan portfolio, making sure we take the proper steps. We have the opportunity to grow tremendously because of the markets we're in, but we want to grow responsibly and make sure that we put on good loans. And I think we've done just that. So with that, I'll turn it to Scott Sandlin.
Thank you, Jeff. As you can see, building shareholder value is one of our primary focuses here. And you can see the slide as it relates to tangible book and earnings per share. Let's go to the next slide, please. I want to talk a little bit about strategic focus and where we are and where we're headed. I would tell you that we're very excited about the markets that we serve. As you heard Brant talk about, when you look at the overall growth that's happening in our market, it's very close to what you've seen in areas like Austin, Texas, Nashville, Tennessee, Madison, Wisconsin. They're extremely large growth areas that have really grown and will continue to grow. We feel very fortunate that we're sort of early stage in that growth pattern with the investments that have been made from the families that live here and the large companies that reside here. We are seeing enormous growth, and we're basically working very hard to fuel that growth and lend to those people and make sure that we have great business partnerships with all the individuals that are coming here. From a growth perspective, you look at some of the types of jobs, as you heard Brent talk about, high paying jobs. We are now becoming one of the very fastest growing technology corridors in the country. With the expense of moving out of Silicon Valley and moving into Austin, Texas, and now Austin being an expensive place to live, Northwest Arkansas is a new target for that type of growth. Obviously, when you talk about the Walmart home office that Brant mentioned, the epicenter of all commerce worldwide will reside out of here. So we're poised to grow rapidly, and you can see that growth is something that is important to us. We did something that most people didn't do in 21. We invested in growing our portfolio by 3 locations. So 33% of our overall locations came in 22, late 21, 22, as Brant mentioned. So we positioned ourselves well to serve new customers. A new segment of our population with the Hispanic focus is the thing that we're really trying to grow new business relationships as well as new customer relationships. So those remain very important to us. Our digital focus, so reaching our customers as it relates to the website or your mobile device, we know that's where the market's going. We invested in that by a new core platform, as Brant mentioned. And we continue to look at our user experiences and investing in that, and we'll stay focused on it. We've done very, very well over the course of the last 5 years with a focus of deposit growth. That's not going to change. We believe that being a significant deposit franchise is very important to us. It helps us financially. It helps our overall bank's health, and it's something that we will remain very focused on as we go into the future. That's why we're making the investments that we are. As we get the opportunity to diversify our loan portfolio, we're continuing to do that. We talk about in all of our leadership sessions what we're doing to find new customers, new businesses to serve, outside of just the normal growth that we're seeing because of the area that we live in with housing. Operating efficiencies, those are something that we're really digging into. We've made some really nice investments, as you heard Brant mention, as it relates to our leadership team. We've made a couple of new promotions over the course of this last year, preparing for this growth, and we're focusing on certain segments of our business to really focus on driving that efficiency improvement that is necessary. So with that, I'd like to turn it over to question and answers. So Julianne, if you want to go there, we're prepared to answer any questions that might come up.
Great, thanks so much. Good presentation.
Yeah, great presentation.
Filtering through some questions, I guess I'll make it a broad one. Is that so you've had Bank OC, you've had some branch expansion, you've had some personnel hiring, so costs probably elevated. The question is, when do those costs have you gotten over the peak of those costs? And at one point, does the revenue line intersect and exceed, and you start reaping the return on that investment?
Sure. So Jonesboro is at break even, direct break even. Harrison and Banco C are a little behind that. So we still have a little bit of revenue growth there to come up to put those at break even. But we feel good about the trajectory and where we're headed. We're up to 25 million in deposits in Harrison and 25 million in deposits in Jonesboro. And so they're in this tough deposit environment. They're grinding it out really well. And that's frankly, when we think about the success or lack of success in a location, it's really about the people and whether or not the community is really attached to them. And we feel like we've done very well with all 3 new ventures in that.
And I think I would add to that by saying, it's a great question, of course, and one that investors would be very interested in. As we've made these investments, I would say that in 22 and 23, we've made those investments, and there's not going to be a significant increase in expenses going forward. As I talked about the operational efficiencies, now it becomes, how do you reach the profitability that Brant's talking about, but how do you hold your expenses flat and start to pour the profit on. Now, obviously, everyone in the banking industry understands and has felt the increase in interest rates that we've all experienced, and profit has been a little bit more difficult to come by. But now that we have at least some normalization of that, and hopefully, and I'm not going to prognosticate or basically try to tell people what I think the future is, but I would tell you that I think we're poised in 2024 to really turn that curve and really bring those profits back in line. So that's what we're focused on here as we prepare for our strategic plan getting approved this year. That's what we're basically presenting to the board, that we're going after profitability and holding expenses flat.
So now in terms of Bank OC, I guess you're 1 year in, or a little over 1 year into the build out, and how far is that into, if you separate that from the other branches? Are we over half of that? We're going to see costs going down, or there's still quite a bit to invest?
No, I think as it relates to the timeline, as you heard Brent talk about, we opened that building late September of 22. So we'll call it 13, 14 months into that initiative. We had originally looked at a 3-year profitability measure. We're on course with where we thought we would be. We're ahead of plan in some of our other locations. And we're obviously investing in, all of us in this room are investing time and energy and bringing that to a sooner profit level than where it's on today.
And I guess the other side, the top line side of profitability is obviously a function of where interest rates are to a large extent, and your loan demand, which loan demand seems to be pretty robust in your area. So where are you thinking about your NIM? Are you thinking we're getting to the close to an inflection point, or we still have a ways to go?
I think if,
Assuming the Fed doesn't start raising rates.
that was going to be my first qualifying statement, was if we're at a place where interest rates can normalize, then I think our opportunity to increase asset yield is very strong. And we have, fortunately, on one side, we're unfortunate because interest rates went up so fast and we had margin compression. But I do think that helped keep the health of the banks intact, because if every borrower in America had experienced an up 500 shock, asset quality would be in a different place. And so I think we're at a really good place to incrementally step into that and have really taken a big shot of the cost of funds increase. And so I feel pretty good about, if rates are normal, that us and a whole lot of other banks are at a place where NIM can go back to a more normal place. And you put our loan growth on top of that, I feel pretty good about the direction we're headed.
It does seem to be on the credit quality, which seems to be very, pristine. Values of, obviously, it seems like property values in residential and is probably quite good, I'm assuming. And how are you seeing commercial space?
We've seen it perform very well in Northwest Arkansas. When you look at the vacancy rates here compared to kind of some of the regional peers, national peers that Scott mentioned, we're performing very well. We have the UA Business Research Center, which put on a presentation a few weeks back, and it was really just a tremendous message about the health of the commercial real estate market in Northwest Arkansas. A lot of that growth from the Walmart perspective and the vendors in the area. We've talked about it a lot internally about the potential issues with work from home and less space being utilized. That has not materialized really at all in Northwest Arkansas. And I think it's largely a function of the influx of population still coming in and demand still being high.
I would also add to that and say that what we're seeing and hearing from our large corporations in our area is that there has been a little bit of a productivity slip in the fact that there was a work from home environment. So they're asking people to come back to those offices. So from a commercial, real estate side, I think you're going to see some locations, come back to work. There's going to probably have a little bit different work schedule than they've had. They may work, from the office 3 days a week and from home on Mondays and Fridays. But the general sense that I'm getting is that they're requiring people to come back to the office to work for productivity reasons.
Great. Well, that's our time. Unless there's other points you'd want to raise for our investors to consider, we really appreciate your time.
I just have a real quick question.
Go
The
ahead,
Banco C, how many branches, how many Banco C branches now?
We have one.
Okay. And it has its own sign and stuff, like it's
It's its own brand. Banco C has its own brand currently. And that's we wanted to focus on the Hispanic community in a multicultural way. Everyone that's in that location speaks Spanish. All the documents in there are both in Spanish and English. So we catered to a very fast growing market in our sector. We're setting about 17%, which is about the national average. The area that we have, our location is closer to 45% Hispanic. We have another town just up the road, just a few miles away from us, that's over 50% Hispanic. But in the SMSA, we're about 17%. And the projections are that in the next 5 to 10 years, that will be closer to the 35 to 40 range. So it's a sector of the population that we believe that we need to, harness and figure out. And it's a customer that we want to serve. We want to serve all customers within our local market. So it's just learning to do business in a little bit different way with a different group of people.
Well, it's a great idea, and sounds like your investment was well timed. And now you're going to get the benefits of maybe stabilizing rates plus the payoff from the investment. A lot of wind at your back.
Very good. Well, thanks so much for your time. And as far for just housekeeping for the end of the conference here, we thank everybody